Hey, this is Rebecca Taylor from Tailored Investments. I have my friend Cale Delaney here with me today. I was talking with Cale yesterday and I was sharing how I need to get more videos out on my YouTube page highlighting other investors and investment opportunities that people are working in. So I wanted to introduce Cale because I think he is an incredible resource in the short-term space, short-term rental space. He's been doing it for a while. So I want to hear his story, share it with our audience, and just give you the chance to get to know him and see if he might be a resource for our listeners. So, Cale, thank you for being here. I appreciate it so much. It's good to see you. Cale and I actually met through, I was trying to think, was this through you heard me on a podcast? Was that right?
Yeah, I heard you on the Best Ever podcast, and
Yes.
and then I reached out to you and got you on my podcast, and then
And
and
Cale's awesome. He's actually invested in one of our deals recently, so I'm really excited that we're partnering together and investing in longer term rentals. And so, Cale, tell us a little bit about your story. Where do you live? What do you do? Tell us about your family. Anything you want to share would be great.
yeah, sure. So yeah, I live down in South Florida, which is why you can probably see a little bit of the glare of the sun. I was making Rebecca jealous earlier with how beautiful it is right now here. So yeah, I live down in South Florida. We have three kids, 13, 11, and 5. And, my journey started really a little bit later in life. When I was around 37, that was when my 36, 37, when my youngest son was born. And that was kind of the changing point in my life in terms of trying to figure out something different. I had been working in the corporation world for, 15, 17 years, whatever it was, working in construction management, for a large, contractor down here in Florida. And after my son was born, it was just wanting to be able to have that time, that flexibility to see him grow up and not miss out on those things. And this was in the midst of COVID, and so I was working at home as well for a bulk of that time, when I got started with the business. And it just kind of reinforced why I wanted to do something different as well, because even working at home, it made it almost harder because, I'd be kind of strapped to that desk for 10 to 12 hours a day, and knowing that, my newborn son was just in the other room and he could hear me and I could hear him, but I couldn't spend time with him,
Yeah.
you know?
Yeah.
And so that just really is what set me down that path, and trying to figure out what can I do to change this.
Yeah.
And, through various things, happenstance, et cetera, I kind of settled on real estate.
Mhm.
Um, Went through some starts and stops and tried different types of real estate, but eventually settled on, short-term rentals, and kind of went all in on it, just because in my mind, I was on a compressed time frame and wanting to, get out of that career as quickly as possible. And, short-term rentals was the highest cash flowing real estate asset I could find out there. And I still think it is.
Mhm.
So that was my main motivation, was, finding a real estate asset that can provide cash flow quick.
Yeah.
And so that's why I chose short-term rentals, along with some other reasons. But it checked a lot of boxes for me in terms of what my goals were. And so we settled on short-term rentals, settled on the initial market, which has been our main market, which is the Smoky Mountains in Tennessee.
Mhm.
And, it's kind of funny. There's a lot of podcast connections here. So I learned about short-term rentals and the Smokies in one podcast.
Oh, that's
Uh,
awesome.
and this was like a few days before Thanksgiving in 2020.
Mhm.
And so I had the time off from work, but we didn't have any travel plans or anything. So a couple days later, packed up a minivan and drove 17 hours out there, and, looked at properties, met with realtors. And, about a month later or so, we're under contract on the first one.
Oh,
And from there, we kind of scaled quickly. So I think we bought 4 that first year, maybe 3 the second year, and similar the next year.
mm,
Um, and it worked. It accomplished the goal of replacing the income, from the job, quite quickly.
yeah.
And so I left that W-2 about 2 years, after I had started with the real estate investing, and, to pursue this full time. And so, that's what I do now. Initially, it was just, building our own portfolio. But then kind of organically as we grow and network within the industry and people see what we're doing, we started having a lot of people coming to us for for help with managing their properties. So we started a management arm um, a couple of years ago for managing or co-hosting other people's short-term rental properties. And then similarly, last year we added on a revenue management arm as well. So where we take care of the pricing strategy and all the pricing for clients as well. So yeah, it's been again, just yeah, an organic process and how things grow out of it. And yeah, it's been a good journey.
That's amazing. I love it. Is your wife involved? Is she, what's her role under, or just she has a different job?
Yeah, no, she's not involved in the real estate portion at all. Yeah.
But she's rooting you on from the sidelines. And how, like, from buying all those, what kind of debt were you getting? I mean, that's a pretty big, like, you're buying fast, buying a lot in those first couple of years. How did you go about from the financing side?
Yeah, so I mean, the thing you'll see with me is frankly, I don't do anything really crazy or special. It's kind of boring stuff, but I've done all conventional financing. The first property we purchased, which is a common strategy with short-term rentals, is especially if it's outside of your market or where you live, you can get that first one qualified typically as a second home or a vacation home loan, which the benefit is that you can get in with 10% down,
Mhm.
which again, when you're starting off, you're typically looking to get in with as little as you can.
Mhm.
Um, so that was the first one. And then from there, it was all just standard conventional investment property loans, 15% down.
Wow.
And we had one seller financing one, which was actually the last one that we purchased here towards the end of last year. It was an off-market and seller financing deal, but beyond that, we've been pretty straightforward. And so I was working that W-2 still when I first started buying, and so that was, of course, helpful in getting the
Yes.
finances. I had a relatively decent salary. And so I was able to purchase those four properties that year, without maxing out my DTI, my debt to income ratio for the conventional loans. And then the following year, the income from those previous properties now could count to offset the debt service. So,
Yeah.
it's just kind of rolling that snowball forward.
Yeah, I love that. That's amazing. That piece can be very complicated. And so if you can figure out a way to make it a little less complicated and bring a little less down and, have that conventional loan, like you said, I always tell people if you do have a W-2 job, like get some loans now because it is a whole lot harder when you're not in a W-2 role to get lend, loans, or you can go the commercial route, obviously, but they often want when we're talking to them like 20-25% down for some of those commercial loans out there. So
Yeah, and so there are the other options, the commercial route, the common one for short-term rentals, especially is, the DSCR or debt service coverage ratio loans, which, a couple of years ago, they were very unattractive. They were like a last resort for most people because they had higher rates, stiff prepayment penalties. Um, but now, as from what I've seen, they are actually very, very competitive. I mean, the prepayment penalties are typically gone. The rates are typically close to on par with conventional. The only real downside is that, like you said, typically it's going to be 20% down with those versus, 15% with a conventional investment home loan. But, it does have the added benefit of you can close in the LLC. It's based on the property's income. So, they're actually, yeah, a very attractive option right now, whereas they were not a couple of years ago.
makes sense. Do you have one bank or lender that you work with all the time? Or are you diversifying that a little bit?
I've used a couple, but primarily one, a mortgage broker. In the SDR space, that is an important thing is that uh, working with, and almost anything really, but especially with lenders, you want to work with people who are specialized in short-term rentals. Um, just because it is, I mean, it's not a new industry, but it kind of is at the same time. And so, especially with lenders and local banks and big banks, like a lot of them just they don't get into it very much. So they don't really understand it. They don't know how to qualify income and various things. So you can get into a lot of challenges with financing if you don't use somebody who is very well versed in short-term rentals. So that's why we always recommend that we typically find you can get the best deals, working with some mortgage brokers who specialize in short-term rentals. They know who to go to. They know, the best appraisers that understand things and all that type of stuff.
Great. And is it state specific mortgage brokers, or have you found one that's working across different states and doesn't have any issues lending?
Most of them work, maybe not nationwide, but in many different states. So
Right. Now, from the short-term market side, I mean, we've kind of seen and heard a little bit that it slowed down. Are you seeing that? Are you feeling that with your properties? I know you've got some like experiential things. I mean, your properties look amazing. One day I want to come stay at some of them. But tell me, like, have you seen a shift at all with things slowing down a little bit in that space, or has it continued to be really strong for you?
I mean, it's still really strong. I think what's there's been several changes, that's for sure. I mean, just like anything really. I mean, during COVID, things were quite easy. Particularly in the short-term rental space. And that's when a lot of people, including myself, got started. And the challenge really has become a few things. One is that, a lot of people who jumped in at that time when it was so easy, uh, once things started to kind of get back to normal and it actually started turning into work, and having to, strategize and optimize and invest in the properties and that type of thing, a lot of people just, found out it wasn't quite what they thought it was, right? A lot of people also purchased very, very wrong.
Mm.
Uh, I mean, it's still happening today, but especially during COVID, people were just paying ridiculous prices for the properties. And, once the income started to come down, which it did, I mean, the COVID years, 2020 through 2022, whenever anybody's looking at, financial history, I always tell them just discount those years. Don't look at those because that's not normal and you will probably never get to those levels again. So, when people started seeing those numbers coming down to what they should have been, following a normalized track, uh, they started running into trouble because they paid too much and this type of thing. So there's a lot of that. And I think the other part of it too is just with so many people having jumped into the space, of course, the competition quantity increased significantly, and the competition level in certain markets increased significantly. So, for example, like a market like the Smoky Mountains, I mean, that is the top vacation rental market in the country and has been for the past 50 years. Well, which is a great thing because, I mean, it's a well-established market. It's built around short-term rentals. The risk of regulation is next to none. The downside, of course, is that there's a ton of competition and really good competition. So it does become much more challenging there to, really set yourself apart and do extremely well. It can be done, absolutely, but you just need to really be more outside of the box, or especially in kind of like the ultra luxury level, those kind of tend to do a lot better. Or just really unique amenities or types of properties and stuff like that. um so that's a lot of the stuff that's kind of happening now. There are still lots and lots and lots of markets that have a lot of untapped potential, where if you can take skills, like for example, if you are in an ultra competitive market like the Smokies or somewhere else, and you transfer that skill set and level of operations to a less competitive market, you can really outperform and set yourself apart quite easily at that point, so there's a bit of a blessing and a curse situation with the type of market, that you choose. But in essence, the market has shifted to the point where, like you alluded to a little bit earlier, is that you can't just have an average property anymore. If you do, it's probably not going to do well. You can't just run it as a hobby anymore. You have to really run it as a business. But if you run it as a business and what I like to say is, create and provide an experience and not just a place to stay, that is how you outperform in today's market, right? So it does take a lot more work, a lot more creativity. Um, but if you do those things, you can do extremely well.
And that's been your strategy, is creating experiences and it to be unique. And I mean, like, is that you alone doing that, or do you have help from the strategy side? And like, I mean, because I've seen some of the pictures of the places you're putting together. I mean, they're beautiful, but I can only imagine the amount of time and effort and work you have to put into creating that. So, would you have help, and how do you do that?
I mean, yes and no. I mean, I try to look at what other people are not doing
Mm.
and try that. So some of it, most of it, honestly, is a little bit of trial and error, frankly. To me, it sounds like a good idea. Not to say I should not probably, maybe be a little bit more data driven in those decisions, but um, I kind of look like what's popular. Like for example, the things that are working for us really well right now, especially in the Florida market, are the health and wellness or biohacking trends. I mean, we could just see that. I mean, that's kind of a super popular trend right now. I mean, saunas and cold plunges and all that stuff. It's all over social media. So we said, why not give it a try? And so we put in those amenities into these properties that had really nice outdoor spaces, big backyards, and said, let's make the focus, again, looking at what are people not doing, because most people are going to focus on the house,
Yeah.
right? And that's great, but house is a house. Yeah, you can design it differently and decorate it differently and stuff like that, but it's still a house. And that's you can only set yourself apart so much from other houses with that. So we said, let's not focus on the house, let's focus on the outside. And so that's where we put most of the efforts is focus on that outside, put in all these amenities, make that the experience and the attraction of why people come and book these properties, not necessarily for the location, but because of the property itself.
Mm.
Um, and like I said, so far, it's been a tremendous success.
Yeah.
And so we're kind of replicating that model, as we can. And it's an ever evolving process. And that's kind of the thing too, is it works right now, but I mean, as trends change and things like that, we probably will need to evolve with that. So, yeah, something you just got to be able to adapt, really.
That makes a lot of sense. Tell us about the returns. And I know every property is different, but what do you aim for? What do you want to see out of properties? I don't have short-term rentals personally. We have midterm and long-term. We do assisted living, multifamily. We do some private hard money lending, but short-term is something I don't have. And so I'd love to hear about the returns and what you're looking for.
Yeah. So, I mean, for somebody who's underwriting a property today, you're probably going to be underwriting to try to achieve 10 to 15% cash on cash return, which is still honestly is going to be a little bit challenging. Um, there's just properties are still quite expensive, and like I said, especially if you're new to the industry, uh, there is a bit of a steep learning curve with short-term rentals, right? So the first year is typically not going to be your best year either, if you're going to manage it yourself, brand new. So it can be a bit of a challenge to do that, and I always recommend people be very conservative in their underwriting with short-term rentals, just because there are so many variabilities, and one of the biggest ones is the management. So I mean, you can have the best property with the best amenities, and if you are a terrible manager, it's going to stink, you know. So, yeah, I always recommend people be really conservative. And if you can, with a conservative underwriting, get between a 10 to 15% return, it's probably worth pursuing with the expectation that you can potentially do better, right? So, when I underwrite, that's kind of how I underwrite is I try for 15% cash on cash with a relatively conservative underwriting with the expectation that I'm probably going to be, if all goes well, I'll probably be generating somewhere in the 20 to 30% range. So, I mean, my portfolio across the board uh, over this past year did on average about 35% return. You know, some,
Yeah.
some, you know, so I think the lowest return we had was maybe like 20%, and the highest was like 60%,
That's
so
awesome. Congratulations. That's amazing.
yeah.
You should be proud of yourself. Tell me, I'm curious, what's the worst like guest you've ever had or thing that happened? That's one of the fears I have is like, what if they tear up my place? And I've seen some horror stories. I'm curious what you've experienced.
Yeah, I mean, can't say, thankfully, I can't say I've had any like extremely terrible guests that have just like trashed the place and damaged tons of stuff. We've had some dirty guests, but um, I think you know, the worst thing is that some some guests, they just they want to abuse the system and, are going to try to get money back however they can, right? And, the system is such that it's it's probably not as hard as it should be for guests to kind of strong arm hosts.
Yeah.
Uh, and so you kind of have to make business decisions sometimes as to, is it worth fighting
Yeah.
or not?
Mhm.
And so you are going to run into some guests that are just out to abuse the system. You're going to run into guests that just cannot be pleased no matter what. Um, and I think the worst situation we had, which it's kind of ridiculous, was we had a guest that showed up to the property, decided they didn't like it, and called Airbnb and reported that there was a gas leak.
What?
Yeah. Well, the
Oh,
property doesn't even have gas, so that's what makes it funny.
no.
However, Airbnb takes safety very seriously, naturally for liability's sake. So they immediately shut down the listing.
Oh,
Uh,
no.
and when they do those types of things, you typically can't even reach Airbnb for several days, because it goes into a whole separate side of their system for safety division, and they like do not respond. Um, so it was just kind of we eventually they had us, send like a technician out to the property to write a letter saying, yes, there is no gas service to this property, so there is no gas leak. Uh, and eventually they cleared it up and, still charged the guest and all this stuff. So it worked out, but it was a pain in the butt and, caused a lot of headache. Uh,
Oh,
so from a guest standpoint, that was probably one of the most headache ones. Operationally, one of the worst things is, these cabins in the mountains, they're typically all on septic. Um, So we've had it happen before where a septic has backed up, which is not fun at all, especially when it's a big cabin full of 16 people.
oh no.
Uh, so we've had that happen where, yeah, you get a septic system that's backing up. At that point, I mean, you're lucky if you can get a septic company out there that can pump it right away. Typically, that does not happen. They're typically pretty backed up as well, usually.
Oh,
Uh,
no pun intended.
so yeah, exactly. So, in those cases, yeah, we've had to, unfortunately move the guests, refunds, and, a lot of that cleanup and stuff. So I think that's probably the worst operational thing that we've had happen.
Sorry to hear that. Oh, we have a couple properties on septic too, and yeah, it's a pain when yeah, we have had one back up at one point, and then another with well that the well like stopped working, and so the tenants didn't have any water, which you feel horrible, and you're trying to get it fixed as soon as possible, but it's just one of those things that you don't foresee happening.
Yeah, exactly.
Oh,
Exactly.
oh, well, thanks for sharing that. So where are you going? What's next for you? What are your goals, and what do you want to see happen in the next year, a couple years?
Yeah, so for us, we're going to be shifting more of our focus to continuing to build out the management side of the business for both the full service co-hosting and the revenue management. I think there's just going to be a continued and increasing demand in those sectors. Um, excuse me, for some of the reasons that I talked about earlier. I think more and more people are just seeing that it is becoming increasingly more work to really operate well and optimize revenue in today's market. So and a lot of people don't have the time or the inclination to want to do that. So I see those areas growing. And so we want to, continue to focus and grow and build our management side of the business.
Yeah.
And then, from the acquisition standpoint, kind of as we're shifting our focus a little bit more into some diversification and longer term and passive assets. So we're focusing in that area for our portfolio ourselves, and then growing out the management side of the business.
Are you managing in multiple states or mainly focused in one area?
Yeah, so right now we manage in South Florida, the Blue Ridge area in Georgia, Smokies in Tennessee, and it's, the Sunday River area in Maine.
Oh, cool. That's
Yeah,
amazing. All the way up in Maine too.
yeah. So we try to it's obviously easier to stay in the markets that you're in, but like we added on the Blue Ridge and the Sunday River Because we had a couple clients that, needed some help. And so we are willing to expand into different markets if it makes sense. Um, Frankly, I'd love getting more properties in South Florida. That's where, in terms of the markets that we're in, that's where I see the most untapped potential. And we've had the most success in terms of, creating those experiential stays and really, really blowing away projections.
Yeah. Do you want to buy any more short-term rentals personally, or you, like you said, focus more on the passive and doing some larger deals outside of just short-term rentals?
Yeah, I mean, I'm always open to it. It's probably not going to be a focus
Yeah.
right now, but if a right deal comes along, I mean, we're certainly not going to turn it down.
Yeah, that makes sense. That's great. Well, how can people get a hold of you? What's the best way for them to connect?
Yeah, through Facebook is probably going to be the easiest way. Just Cale Delaney, Instagram. I'm not as active on Instagram really, but you can still find me there. I think it's Cale_Delaney. And you can also check out the Fit Investor. That's our podcast as well. Which you can see in the background there.
Yeah.
But yeah, those are the best ways to reach out.
And I found out recently that Kale does provide coaching. If you are ever looking to hire a coach to help you, in the short-term space, he's obviously a wealth of knowledge. So I would definitely reach out to him if that's something that could be helpful to you and your business as you're thinking about short-term rentals. So thank you for
Sure.
your time. I'm so glad that you joined me today. I'm glad that we've met each other and gotten to know each other over the last year. It's been really good to work with you. And so appreciate you being here.
Yeah, likewise. I know it took a little bit longer than the 10 minutes there, but
I know. There's like so many more questions I could ask you, but I will stop asking because I'm gone way over our time. So thank you for your patience.
no, absolutely.
All right.